Hi, thanks for joining us today. I am Nicholas Rios with Financial Strategies. Today I have with us Beth Brandt, longtime banker with North Point, and Adele Pick with Codwell Real Estate. Today we're going to be talking high-level questions about real estate, the current markets, potential trends, and speak with the experts themselves. We'll start it off with overall, how would you describe the overall real estate market? One phrase, word.
Astounding. And again, it depends from which perspective you're looking at. If you're looking from a seller perspective, it's been unbelievable because the prices are super high. If you're looking from a buyer perspective, it's very challenging.
Yeah, well put. So it depends who you are.
Correct.
Beth?
From a mortgage standpoint, it's a little bit of a roller coaster because rates are a little bit like the stock market. They fluctuate on a daily basis. And so it's a little challenging.
And we're really seeing that on the bond side, right? Because that's what it matches up and down quite drastically.
Yes.
Talking about the rates, how have rates affected really the market? Have we seen a slowdown? Is it more of the same? Or like you said, depending on who you are?
So obviously we had prehistoric lows in the last several years. I think the buyers got quite spoiled because they got to thinking that perhaps is the new norm. So the minute the interest rates started to go up and pretty much doubled since this time last year perhaps, give or take, homes that they could afford last year, like say last summer, they can no longer afford the same price level, but their champagne taste, if you will, hasn't gone down. So if they're expecting that X amount of dollars is going to buy X amount of house with upgrades, location, etc., and it's falling short of their expectation, it's very frustrating for them. And so what's happened is that they've become frozen, looking, unable to do anything. And to tell you the truth, I've got buyers that even though they are putting, which a few months ago would have been perceived as outstanding offers on a home in terms of price, the sellers, I don't want to use the word greedy, but the sellers are listing their homes at the highest prices I've ever seen, higher than last year.
Really?
Yes, certainly in my niche. And so I've had to say to the listing agents, take a step back. Think about a few months ago. If you were offered this kind of price a few months ago, you would have been jumping for joy. All of a sudden, you're thinking it's a lowball offer when you're going to be the highest priced house in the area, and my buyers are going to be record breakers, which they don't want to be.
Right.
Therein lies the challenge.
Well, it's quite different than what we hear headline news, that's for sure, with dropping prices. But I know South Florida has been an outlier for the rest of the country.
From what I understand, from the middle of the United States to the West Coast to California, the market has been on a decline. But from middle of the state to east, and certainly southeast Florida, it hasn't dropped at all. I had one seller that's moved to New Hampshire, and he's having a harder time finding a home than people are having down here. They're getting snatched up the minute they go on the market and at outrageous prices.
Wow.
And who wants to live there compared to here, right? So it's very interesting.
Oh, thank you, Adele.
Well, Florida is a very unique market because you have so many people moving from other parts of the country because they love living here.
Of course.
And you also have buyers from South America. And so you still have a very major shortage of homes. Right now, even so, the volume of sales is not as big as it was in 2020 or 21, but still the number of homes for sale right now is 38% lower than it was prior to the pandemic.
Really?
Yes.
38%.
So 38% lower at the end of 2022 than it was at the end of 2019, just prior to the pandemic. So when you have a shortage of homes like that, prices are really not going down. And some buyers, it's sort of a little strange in that in 2020, the first-time home buyers, or people in the below 500,000 price range, had a hard time finding a home because other people were willing to pay 150 over purchase price or over appraisal. It didn't matter. And so those buyers were shut out if they were a buyer with a smaller down payment, for example. So now they won't buy a home because the rental market in our area has gone up so much, and rather than pay off the mortgage from the landlord, they would rather pay off their own mortgage.
Of course.
So at least now they are back in the market, and I find that buyers are more willing to negotiate on the price a little bit more, which they were not doing in 2020 and 21. And sellers are willing to negotiate a little bit more, and they have to sort of learn to see what they qualify for and what they are approved for, but they are coming back to the market.
So really, the interest rate's not affecting the volume as much as we would expect because of low supply and still quite a lot of demand.
I would say that here's the thing, it's very important to set seller and buyer expectation for the market. The buyers kept anticipating a crash, so they held out. Interest rates were going up, prices were going up.
Oh, yeah.
The crash has not happened, and from what I understand, it's not happening because we're not in 2008. So there is, just to give you an example in Western, so that's my niche. So typically in spring pre-pandemic, at this time of the year, there would be about approximately, say, 385 single-family homes available on the market for the spring buyers to come and choose from, in all price ranges, from the least expensive to the most expensive. This time last year, there were 26. 26 from almost 400. Then it went up after summer, and things got sluggish with the interest rates going up, and we went to about 166, which, although still very low, the perception was that the market was turning. However, a lot of sellers are not putting their homes on the market, and we can talk about that later. So the inventory started to go down again. And as of yesterday, single family homes in Western, there's 109, which is still incredibly low supply.
Wow.
And if you take the number of homes that need renovation, that sort of cuts them out the market, but we'll talk about that later as well.
No, thank you. Also valuable information, so especially locally, as much as we want to hear nationally, locally is what matters to us.
Right.
On the lending side, are some creative ways you're structuring lending outside of this typical 30-year fixed mortgage?
Yes. North Point Bank is a portfolio lender, and we have some unique programs. One specific program that we introduced in June of last year is called an all-in-one loan.
Okay.
That particular loan is tied in, you have a mortgage, and it's tied into a linked bank account, and the interest is calculated between the difference of the loan amount and how much money a borrower has in their bank account. So if a borrower is taking a loan for $500,000, but they have $200,000 residual money, then they will only pay interest on the difference, which is $300,000.
So the money resides at North Point?
Yes, the money resides at North Point, and they pay less interest. The more money they have in the bank, the less interest they will pay, and but they still have full access to their money.
Right, it's liquid.
We have been able to convert several cash buyers into that particular program. In fact, 2 weeks ago, I had a buyer bought a home from a builder in Parkland for $1.5 million. And he was buying it as an investment property, and he did a cash contract because he got a very good deal by closing in 21 days. And then he contacted me because he really wanted to take a loan after closing, but I found out that he has $1 million in Bank of America earning him 2 or 3% interest. So I said, why don't we do the all-in-one program? And because this way, if he doesn't need the money, this loan isn't going to cost him anything. And if he needs some money, and it's funny because when we first tell clients about this program, they think it's too good to be true. How are you going to make any money if you don't charge interest on your loan? But we decided to introduce that program because it gives us access to a very worthy borrower. And the more money we have in deposits, the more money we can lend.
Of course.
So it's very good for the bank, and it's very good for the borrower. And we have many borrowers who are doing that particular program.
Right, because on the North Point side, correct me if I'm wrong, you expect those deposits to remain in place longer than a typical, deposit, because it's there to take against the interest of the loan.
Right.
Right, so you're looking for those high credit-worthy people.
Right. And this loan is only offered to borrowers who have excess cash and residual income.
Mm-hmm.
We're not offering it to buyers. That's why we don't really advertise it that much.
Right.
Because it's not for a person living paycheck to paycheck or a first-time borrower.
Right.
But it is very attractive to investors, second home buyers, or anybody with residual cash or positive cash flow.
Oh, well, very unique. I know it's the first I've heard about it too, so I'm glad. Hopefully our audience will take advantage of that as well.
Yeah, as a matter of fact, I have a couple clients that have this loan, and the loan they're not paying any interest because the loan amount and the money in the bank is the same. But the majority of them are about half and half.
Right, of course. There'd be a high balance in there to pay nothing, right?
So they pay less interest. They like that fact, and it really encourages a borrower to save.
Right.
Because they realize very quickly the more money they deposit in their bank account, the less interest they'll pay.
Absolutely.
Yeah.
Can we talk a minute, and I bet that you are better than this than I am, about the 3-2-1 buyout being offered?
The which one?
The 3-2-1 buyout.
Yeah, well, that's another question on another.
Gotcha. Okay.
Because
that's another creative solution.
Yeah, we're going to come to that.
Very creative solution.
But Adele, I think a question that I think a lot of people quite often think about, if I'm, what is the most attractive, high demand type of property at the moment? Are we seeing residential that's more suburbs, the suburbs, or condos on the beach, or residential out east? Where are you seeing the highest demand for properties at the moment?
It's very interesting. In South Florida, depending on the buyer is depending on the demand. So we are seeing a lot of millennials, for example, they may have grown up in the suburbs, they've moved out of the state, or they've moved to Brick Hill, downtown Miami, they have young children, they're going back to where they're good schools, because private school is so costly. So we're seeing a lot of millennials moving back into the suburbs. The type of properties in demand in those suburbs are ones that have been updated or well maintained, or that have new roofs, or that have impact glass. For people that are international buyers, typically they are buying the condos downtown Miami or downtown Fort Lauderdale, although some are now also buying single family or they're buying property as investment to circumvent the risk of inflation. So for the international buyer, I would say it's more the glamour of the condo life in downtown, but primarily for our local buyers, it's safe residential neighborhoods that are in good condition.
So talking the western neighborhoods and
Western Parkland, Boca,
Yeah.
etc.
large properties.
Yeah.
We find also that the areas closer to the beach, remember there is no more land that they can build on. So we have many clients who are builders who are buying homes, and sometimes they're remodeling those homes that are close to the beach, or other times they buy the home and tear it down and build beautiful new homes on them, and there is no shortage for those buyers. So those areas are extremely popular.
We're seeing a lot of that out east, just old Florida homes just being really demolished in a modern, completely different. It's changing pretty rapidly.
But even areas like Miami Shores, even if a house is not modern on the outside, if it's been renovated in the inside and it's well maintained, because it's one of the closest single family residential communities to downtown Miami, the prices have tripled in the last 2 years there.
Good for the sellers and the homeowners.
Yes, great for
I think it's wonderful.
It is.
It's wonderful for the area.
And in your business, things have changed a lot since 2020, sub 3%, and the demand went from nothing, the world was going to end, to everyone wants to work from home and buy property. how have you shifted your business personally to meet this new demand and new type of buyer? Has it been the same, or is it business as usual, or we're bringing on more people? Curious about you particularly.
In terms of
just your business and management of it, and
so the volume of business, you didn't have to sell as much to make as much,
right?
because the prices went up beyond anybody's wildest dreams. As an old-time agent in my community, I walk around with my jaw on the ground when I look at the MLS and I see the prices.
Right.
Homes that are being listed at certain price points, pre-pandemic, you could have picked up in the most exclusive neighborhood in Weston, for example, like the creme de la creme. Now, the average neighborhood with more cookie cutter homes are asking those prices. And it just astounds me. For, I think, newer agents entering the market, they perhaps don't know any different.
Of course.
You see, that's the difference. But I think that, certainly for me, I didn't have to do as much marketing as I used to do personal marketing.
Okay.
I still did everything that I do, but for my own, like I used to do a lot of print media. I didn't have to do that because I didn't even have time, because we were like, on to the next one. I was lucky enough, I'm primarily a listing agent more than buying, but my sellers become buyers.
Of course.
And so for me, that's kind of slowed down in the last few months. But I was very lucky in, during the pandemic era that I'm corporate Rios certified, so a lot of people were relocating from Seattle, California, New York. So
a lot of relocations.
there was a lot of relocation. So, play tour guide, show them around. And remember, when people coming from those areas, they don't know Weston from Parkland, from Boca, from out east. So we would do the whole gamut. We would start out in Weston, we would go to Davie, we would go to Plantation, Hawks Landing, we'd go to Parkland, Boca, and then they could make their choice. And so we did a lot more traveling outside our niche.
So a little bit more of a tour guide than your usual, as it sounds like.
But I love doing that.
Yeah, of course.
Yeah, I do enjoy that. And I really like to see the properties that are available outside our more comfortable, our comfort zone and our niche. And also it's always a great opportunity to network with the other agents who sometimes we know the name, but now we could put a face to. So, and I'm always like amazed that there's like life outside, like our area, wow, this is really beautiful too. Even though, I've lived here 40 years, I still South Florida booming and growing up, being built up, but you kind of get more comfortable in your niche, and so we have found that we have to really break out of the niche.
Okay. Oh, that's a great point.
Mm-hmm.
Yeah, thank you.
Well, from our standpoint, we've seen a shift in 22. And the shift has been that there are so many more investors in 22 and currently compared to what they were in 2020 or 21. Because during that time, the investors didn't want to pay $150 over appraisal and stuff like that. So they were really, they were not cash buyers. Also in 2020 and 21, there was such a huge amount of percentage of people paying cash for a property just to get the property. So we've seen a big increase in the fact that the investors are back. I would say probably nationwide, I believe there are about every 18% of transactions are investor transactions.
Wow.
But in our area, it is much higher. And for second home buyers, I think 50% of second home buyers are paying cash for a property or used to pay cash for a property.
As an investment or second home?
A second home buyer,
Wow.
they're buying a second home,
Right.
50% of them typically will pay cash. And I believe that percentage is still there but we've noticed since middle of 22 and now, that the investors are really back in the game, and that shows me that the market has a lot of confidence in the economy.
In this area specifically.
Yes, absolutely.
Yeah.
We have several large groups of investors, people that own 20, 30 properties. I've actually had one client that I've done 25 loans for since 2014. One borrower.
It's a good
Yes.
client.
Okay, yes, he is my record holder. And then I have several clients at 15, 12, 10, besides the, you know, it's amazing because some of the reason why they come to us is their transactions are more complicated because they own so many properties.
Of course.
And we can close loans in an LLC, and a lot of times the investors like that. And we also have programs that are based on investor cash flow. So if a person is buying a 3 or 4 unit property and they own 30, 40 other homes that they own, we can do a loan for them that just looks at the mortgage payment and how much the rental income is. And if the rental income would pretty much cover the mortgage payment, we'll do the loan. We don't have to verify their income. We don't have to verify what other mortgages they own or don't own. It is a very easy loan for them, and investors, this is what they are looking for.
Absolutely. Simplicity, ease, quickness.
Right, absolutely. And when you own 20, 30, and like I said, we have several clients with as many properties, it makes it very difficult for them to get a regular loan. But when we've done 25 loans for one borrower, and I have 15 and 12, several people in that price range, they don't really go anywhere because we've done it so many times for them that they know what we need, and it's easy to update their file versus starting all over again.
Right, a good partnership.
Yes, absolutely. Yes.
And I think, Adele, you were touching on this, but on the seller side, this is the 3-2-1 option, I think.
Yeah,
we're
well,
discussing.
it's really one of the programs that is very attractive to people for many different reasons. To a buyer that is especially experience some payment shock when they're buying a home, if they are used to a much lower payment. And we have a program called 3-2-1 buy down. And what it means that if a rate is at 6%, either the borrower or the seller can pay down to buy down the rate for the borrower. So in that case, if the rate is at 6 currently, then he can have a 3% rate the first year, then it goes to 4% in the second year, 5% in the third year, and it doesn't go to the 6% till year number 4. By that time, the income is going to be higher, and many times a seller will pay for that. The benefit to the seller is that if they have a home that's a little difficult to sell and they have to reduce the purchase price, if they reduce the purchase price by 10 or 15,000, it really doesn't give a big benefit to the buyer. It lowers the buyer's payment by maybe $100.
Right.
But if they use the money, if they advertise and they use the money that we are going to offer a 3% interest rate to the buyer of this home, and we're going to buy down the rate, now you're going to get their attention. And if you have a home that's difficult to sell, that may be, it's a very good source to buy the home. And also on the buyer side, if buyers are not comfortable with the current payments because the interest rates are a little higher, by offering them that program, it gives them that transition, so they can get used to the higher payment if they are used to paying. Many people are now living with family and they're really not paying rent, so they're not used to having a mortgage, and this sort of lowers their payment significantly for the first 4 years. So you can do it as a 3-2-1 buy down or a 2-1 buy down.
So it's really just a gradual adjustment to these new higher interest rates.
Absolutely, yes.
And is there a refinance that's possible?
You can always refinance.
Okay.
We don't have any prepayment penalties.
All right.
So if rates were to go down, a borrower can always refinance it.
So it's very attractive.
Yes.
And it's particularly interesting on the seller side, being able to, instead of lower the price by 10,000, help the mortgage really go down for the buyer.
Right. It makes it. It's a benefit to the buyer, where it makes it more attractive for them to buy the house, and it helps the seller to get the house sold.
Yeah, beneficial on both sides.
Yes, so it's a win-win.
Yeah.
Definitely, two parties will be
And not
very happy.
everybody offers that, right?
No, that's a national program that just became available, but the problem is that a lot of realtors are not familiar with it, and they don't understand how it works.
Right, but remember, we have a situation of a particular buyer that I wanted to send to you, and you said that with the bank he was going through.
Well, he was getting a loan, he was a borrower with a financial, like Charles Schwab or one of those,
Right.
and they were giving him, he was a customer of the bank, so they were giving him a discounted rate, which, that's something that he has that relationship with that company, and they were giving him a discounted rate, so I didn't feel that our situation was the right situation for him.
Right, because sometimes you just can't beat the big banks,
Right.
This is
No,
what
it's
it
not
is.
the big, it wasn't a
Yeah.
big bank, it wasn't a bank, it was like an investment.
Oh,
Right, I think it's a Morgan Stanley.
absolutely.
Right, so he may have had a certain amount of money with them, and I don't know if they were using some of his money as security or whatever it is, but it was that kind of relationship, and he was receiving below market rate, and I told him he should take it, absolutely.
That's good advice, obviously.
Yes.
And really, we've answered all the questions today. I want to make sure I touched on topics you wanted to bring up that buyers and sellers should be knowing. Maybe if there are opportunities that you see or trends that people aren't aware of that you would want to touch on, Adele.
Whenever real estate gets a little challenging, I always like to say we've got to go back to the basics. There's nothing like basics. And what is the basic? The basic for a seller is take your house, and if you're putting it on the market, whether it's a strong market or weak market, I always firmly believe in delivering a house dressed for success. So declutter, do the repairs, stage it, have it looking beautiful, if you put it on the market looking better than everybody else in your neighborhood, you're going to sell it first.
Right.
You sell it first and you sell it quickest, you're going to probably get close to your asking price. Really what they should do is price it like, instead of being these outrageously high prices that are sitting in the market and not moving and becoming stagnant, rather price it maybe at a fair market value, a little above fair market value, generate the activity that's going to give you multiple offers scenario, because when you get multiple offers as a seller, it gives you a position of power. Now you can call the shots, financing, inspection time frame, appraisal deadlines. So if you as a seller are empowered, you're more apt to, it's just more beneficial.
Of course.
For a buyer, likewise, I always tell the buyers, every time a buyer likes this particular property, the chances are that everyone else looking is going to like that exact same property for the exact same reason. Shows well, new roof, impact glass, presents well, etc. So what happens? You're going to get multiple offers. If you're getting multiple offers, then you as a buyer have to be ready. If you don't have the cash, you're going to somebody like Beth, who can give you a very rapid loan commitment time frame, who can close the house quickly if the seller wants that. And when you present a clean offer with minimal contingencies, like tightening up those kind of deadlines, the chances are your offer will be accepted even if you're not a cash buyer, if you're presenting really stellar terms. So we have to counsel the buyers in that regard as well.
Of course, expectations, right?
Yeah.
Correct, setting the expectations for both parties.
Well, we work with many borrowers, and what we tell them is it's very important for them. Number one, establish what loan amount you can qualify for and what you are comfortable with. That's very important, because many times clients will come to us and they say, we are looking for a house that is in the $400 or $450 price range, but they want to have a $2,000 mortgage and they have a small down payment.
Right.
So you have to sort of educate the borrower as to how much $2,000 mortgage will buy them in a home if they have a certain amount of money to work with. Another big issue is to get the mortgage ready as far as the credit is concerned. We have many borrowers that we work with for 6 months or sometimes a year to get the mortgage ready, because we need to help them fix the credit,
Of course.
or let them know how much money they need to have for that transaction, so that they can make an offer that is going to be accepted.
Right, because I'm sure there's plenty of offers get denied for that exact reason.
Right.
It's not well put together, low,
Mhm.
and it's not strong. And like you said, the demand is there, so people have to be prepared.
The
Yeah.
opportunities, I think, for the opportunities for a seller right now are to try and get that you can get the highest price that I've ever seen in my real estate career of 24 years. So that's the opportunity for the seller. The opportunity for the buyers, if it is a product that's sitting on the market because it's not well maintained, doesn't show well, doesn't have a new roof, etc., and the price is going to come down and down and down, that's where a buyer has an opportunity to come in and get that in a lower price but still be in a good neighborhood, for example. So there's the buyer opportunity.
Okay.
Yeah.
It's
Right.
a little more work, but
Right.
that's
Sometimes we tell them, put a little less money down, leave yourself more cash because you're going to need to remodel the home. And I've been very lucky with North Point in that we get many loans because we are a portfolio lender, and we do many loans that don't fit into the regular box of the conventional loan program. For example, in the middle of March, I had two transactions that came both on March 15th. Both had been turned down by other lenders for different reasons. One was a condo that was non-warrantable, and two other lenders turned that loan down, and we got that loan closed on Friday. 15 days later, we got the loan closed. And also, I had a borrower who was divorced in January, and she only been receiving child support for 3 months. And the normal guidelines call for 6 months. So this borrower had been turned down by two other lenders. In fact, that borrower is from Atlanta. And at first, her ex-husband was going to buy the house as an investment.
of course.
But he couldn't qualify anyway because they still haven't sold their other house. And she really didn't want to live in a house that's owned by her ex-husband.
Yeah.
And then another real mortgage person that didn't have much experience, obviously, thought that he could do a loan as an FHA loan. So that didn't work. So she was referred to us by a customer. And we knew that we had to do an exception because the normal guidelines require 6 months. But at North Point, if a loan doesn't meet a certain criteria, we can fill out a one-page little scenario about the loan and explain why we should be doing that loan. And in this case, the borrower had very good reserves, very good credit history, and we verified that she has been receiving it for 3 months, and she gave us her husband's or their joint tax returns so we could see that the husband made the money, and that's why he was obligated to pay the amount that he was. And we got the loan closed also within 15 days.
Right, so you have more flexibility on these guidelines.
Right, we don't.
Maybe a little too stringent.
I would say about 50% of our loans are the normal loans that meet all the guidelines, and the other 50% are just people have sometimes issue with a property, or sometimes it is with a borrower, and sometimes with the size of a property. Like some lenders don't do condo hotels under a certain size, and in our area we have many of those, and so and we don't have those restrictions.
Right.
And we go a lot more on the strength of the borrower, the fact that they have reserve and good credit.
Right.
So
Stuff that
we
matters
don't
the
find,
most.
right, we don't find
Yeah.
that loan would be very risky. Why would somebody default if they have all kinds of reserves? And
Liquid assets in the bank. Right.
exactly.
Very interesting.
Exactly.
Well, thank you both for today.
Thank you for
That was
having us.
really knowledgeable for myself, and I'm sure the audience, and I appreciate your time.
Thank you. Thank you.
And thank you all for joining us.
Perfect.